Meantime, earnings season fast approaching, but you can bet it won't be like any we've seen in recent memory as businesses across the nation, try to navigate the coronavirus pandemic. Investors can expect delayed reports and plenty of really couching from companies in terms of guidance and other things. For now, joining us right now to talk about it in an exclusive interview is SEC Chairman Jay Clayton. Chairman Clayton, thank you for joining us. We are about to get into earnings season, and what should investors expect in terms of what companies can and cannot say, and what are you telling companies that they should be saying?
Andrew, thanks for having me on, and we are going into earnings season, and our investors in our markets generally are thirsting for information about our companies, and we recognize here that it's a different earnings season. Your typical earnings season like this, you'd have Q1 numbers, and you'd be giving investors information about the path you were on, how Q2 and Q3, would trend in a certain direction based on Q1. Well, that's not where we are. What investors want to know now is where do companies stand in light of the shut-in? How are they operating under the current conditions? And what do they see for the future under current conditions? And then a path to recovery that is consistent with our health, our decision to put health and safety first. And that's what investors want to know. You had a previous guest on who was talking about changing production, changing capital expenditures. That's exactly the kind of information that investors are thirsting for.
Right. Chairman, one of the other questions that investors have is there are going to be a number of businesses that are in negotiations, frankly, with the government when it comes to bailouts, whether it's the airlines, whether it's Boeing, whether it's others. What do you believe is their responsibility in terms of disclosure about those types of negotiations as they're taking place?
Andrew, you bring up a terrific point. Again, we're in a very different environment. Companies are going to be talking about where they stand, whether they need new capital, their plans going forward. Those plans are sensitive information. I encourage companies to get out there, disclose where they stand, and limit the amount of Now, it's not possible to limit all sensitive information. You've got to be in negotiations, but limit speculation as to where your company stands as we move forward. And then with respect to things like financing, possible changes in operations, material changes in the way you do your business, practice good corporate hygiene. Announce them as soon as you can, and before you're able to announce them, keep that information as tight as possible. We really need to preserve market integrity through what we all recognize is going to be a choppy period in terms of company information.
Let me ask you a related question about company information. A lot of hedge funds and professional investors are spending their days, as you know, trying to comb through information about drugs and various scientific breakthroughs that may or may not be happening. And there is information flowing across Wall Street about all sorts of projects that are in the works. How should investors deal with that information? And frankly, are public investors, mom and pop, the retail investor that's home, at a disadvantage?
Look, information is the lifeblood of our markets. And and as I just talked about it in response to your last more general question, we at the SEC try to put in place a framework so that information is disseminated to investors as fairly as possible. We want companies to follow good hygiene during this period so that it is. That said, there will be people out there trying to get information about drug trials, trying to get information about therapeutics, trying to do this. We don't want to deter them. We want capital to flow into places where it's going to do the best in responding to this healthcare crisis. But I just ask everybody in the marketplace, particularly around public companies, to practice good hygiene. It's very, very important.
Separately, and I know you don't want to talk about specific cases, I will talk about a case, and we can maybe use it as an example, but it's interesting in this regard, which is, and we talked about Bill Ackman last week. You didn't talk about Bill Ackman, but we alluded to Bill Ackman coming on the program, having a very bearish view and bearish take. He had publicly disclosed that take prior to coming on the air. He's since taken a very bullish view and made disclosures about that view. Is that considered good hygiene, that kind of approach? Or is that not good hygiene when you see investors that when they switch their approach, but you want them to come out publicly and tell everybody?
Andrew, I started with companies. On investors, and I'll just speak generally, we want market commentary out there. Information is good. But when somebody has a position and they're talking in particular about a particular company, we believe it's appropriate for them to disclose that position. If it's a short position and they're saying that company is, challenged, tell people you have a short position. If it's a long position and you think a particular company is going to do well, tell people you have a long position. You guys do a good job when you have analysts on flashing up on the screen what their positions are, whether they have a position or not. Particularly in these times, I would encourage anybody who's making comments, particularly about specific companies, to make that kind of disclosure.
Right. And the last question I was going to ask you about is buybacks and dividends, because clearly those seem to be on the table for a lot of companies about whether they're going to continue them. You saw in Jamie Dimon's letter just yesterday, he sort of walked through various permutations with which he could see the economy going, and in a worst-case scenario talked about potentially having to suspend the dividend if, in fact, this were to be a prolonged and extended crisis. How should companies communicate how they're thinking about their buybacks and dividend programs in this environment? And would you encourage companies to continue their buyback programs during this crisis? Because there's something sort of a very perverse idea, which is as the stock is low, this is oddly enough probably a very good time to buy, but the optics of buying are challenging.
Well, you started in the right place, which is communication. Communicating to your shareholders how you see the company performing under different scenarios, and then what that means for your capital structure, your liquidity position, and your capital needs. That's the kind of communication. Now, what you do in terms of your relative debt-to-equity ratio and how you handle that, and whether you believe your investors are counting on a dividend or not counting on a dividend, that's a company-specific decision. We did see a number of the large banks say that they were going to suspend buybacks during this period and preserve that capital. Communicate and tell people why you're making the decision. Right. Investors want to know why. Okay.
Jay Clayton, Chairman of the SEC, we always appreciate talking to you, especially during these turbulent times, and appreciate all the work that you're doing. Thanks so very much.
Andrew, thank you.